It's Friday, the 16th of July, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. The unemployment rate in Australia hits a 10-year low, but the lockdowns in the country's two most populous states likely to halt the momentum. That's our main story. Also coming up in today's podcast, Victoria announces a snap lockdown while the New South Wales Premier sees green shoots in the fight against COVID. The federal government asked Telstra to step in to help with national security, and cybercrime costs the economy $3.5 billion each year. Then, stay listening for my chat to Luke Hampshire, Chief Executive of luxury jet group Airlie. But first, here's a brief look at markets. Wall Street was lower overnight, led down by the tech-heavy NASDAQ, which was off more than 1% in early afternoon trading. The S&P 500 was 0.5% lower, and the Dow Jones Industrial Average was trading down 0.1%. There were more big bank results that beat market expectations, but some of the big tech stocks, notably Amazon and Google, went backwards. European markets fell overnight on the back of rising COVID-19 cases. London's FTSE and the Stocks Europe 600 were both down more than 1%. The local share market fell 0.3% yesterday to finish at 7,336 points, notwithstanding the very strong employment report for June. The big miners did well on the back of strong growth figures out of China. More of that in a moment. BHP jumped 1%, and Fortescue Metals and Rio Tinto both rose more than 2%. Afterpay was down 2.3%, while CSL was off 1.7%. Medical device group PolyNovo was the worst performing stock of the top 200 yesterday, falling 8.7% after providing a sales update on Wednesday. Zipco dropped 5.6%, following its 11% fall the day before, after global giants Apple and PayPal upped competition in the buy now, pay later market. And finally, car accessory group ARB Corporation was the best performer yesterday, up more than 7%, after it reported a jump in sales revenue. Bull bars are popular at the moment. Oil prices fell overnight amid signs that OPEC might increase production in coming months. Gold prices rose again over the past 24 hours and are trading at close to $1,820 an ounce. As a result, one of the best performers on the ASX yesterday was gold miner St Barbara, which rose 7%. In fact, several of the gold stocks had a good day, including market leader Newcrest Mining, which jumped 1.5%. And the Aussie dollar is trading at 74.2 US cents. The unemployment rate has fallen to its lowest level in a decade, hitting 4.9% during June and confirming the strength in the jobs market. A year ago, the unemployment rate was 8.4%, and employment is now more than 1% higher than its pre-coronavirus level in February last year. The economy created 29,100 jobs last month. There were 51,600 full-time jobs, and part-time employment fell by 22,500. The result was much better than expected. The downside in the figures, and there's always a downside in the dismal science, was a rise in underemployment, up 0.5 percentage points to almost 8%, while there was a drop in hours worked due to the Victorian lockdown. But the ratio of employment to population hit a record high of 63%. According to Shane Oliver, chief economist at AMP Capital, Australia's employment level was up 1.2% on pre-COVID levels, one of the few economies to have fully recovered. By contrast, the US labour market has 4.4% fewer jobs. The month didn't include the lockdown in New South Wales. Along with a snap lockdown in Victoria last night, the New South Wales restrictions could trigger a rise in unemployment when the next set of figures come out. That's what should happen, but leading indicators of jobs, vacancy, job ads and hiring intentions all remain strong, and the labour market continues to surprise on the upside. Normally, such a strong report would add weight to the argument that interest rates should rise sooner rather than later, but the lockdowns have changed all that. In a moment, the rest of the news you need to know this morning. In overseas news, the Chinese economy grew by 7.9% during the June quarter, about half the level of the March quarter. The world's second largest economy is now almost 13% bigger than it was 12 months ago. Not bad, given there was a pandemic in between. High-tech manufacturing led the way, followed by the more general manufacturing sector, which, of course, is a big buyer of Australian iron ore. The World Health Organization overnight said that proof of vaccination should not be a condition for international travel because of the inequitable distribution and scarcity of vaccines. The European Union this month launched a digital certificate that shows if a person has been vaccinated. And new coronavirus cases in Tokyo have hit a 6-month high, with the Olympics just a week away. Around 85% of people in the Olympic Village will be fully vaccinated, and the Games will be held without crowds. Medals will be given to athletes rather than placed around their necks. Locally, Victoria returned to lockdown last night after 2 more cases of COVID-19 were discovered in the community, and a number of schools were forced to close. New South Wales recorded 65 cases and Queensland 3, all from the one family. State Premier Daniel Andrews said Victorians needed to get in front of the virus and could only leave home for essential food and supplies and exercise and must stay within 5 kilometres. Victorians know exactly what the rules are, having experienced them all too often. There are now 18 positive community transmitted cases in the state, all linked to the outbreak in Sydney, and brought to Victoria by a crew of removalists and a family returning from New South Wales who didn't isolate. In New South Wales, Premier Gladys Berejiklian said she was starting to see green shoots in the crisis and welcomed the lower number of cases yesterday. She said the fact that the numbers have remained contained was a win. Of the new cases, there were still 28 people moving around the community while infectious, and that's the number she wants to get to 0. A return to school for students would be a priority when restrictions do eventually start to ease, Ms Berejiklian said. I certainly hope so. The Prime Minister Scott Morrison last night altered federal assistance packages, making them simpler to access, and said they would be available to Victorians. And in other COVID news, New Zealand has pressed pause on the travel bubble between it and the east coast of Australia. The major football codes, the AFL and the Rugby League, will relocate to Queensland to continue their competitions. The Prime Minister conceded the vaccine rollout was about 2 months behind schedule, but blamed changing advice around the AstraZeneca jab. He said he'd lined up his first phone call with Pfizer's CEO. And Mr Morrison also announced a number of changes to Medicare and childcare. Telstra and other commercial businesses have been approached by the Morrison government about taking an ownership stake in the Pacific operations of a telecommunications company to block China from buying the business. Canberra wants Telstra and others to buy Digicel assets in Papua New Guinea, according to the Financial Review. It's concerned that if the Digicel 3G network falls into Chinese hands, it could be used to spy on PNG, access sensitive data, and disrupt activity in the region. Neither the government nor Telstra were commenting yesterday, and there's no indication that Australia's biggest telco was interested, but it's a pretty incredible story. Spark Infrastructure confirmed it had received a takeover bid from a consortium led by the Ontario Teachers Pension Plan Board and financial giant KKR. The bid was $2.80 a share at a 13% premium to Wednesday's closing price. Remember, the stock jumped nearly 8% on Wednesday before the company asked for a suspension, so the premium is closer to 20%. The consortium had previously offered $2.70 a share. Spark yesterday said the $5 billion bid still undervalued the company, but management would engage with the consortium. Obviously, they're just a little bit interested. Cyber attacks cost the economy $3.5 billion a year, and calls to the Australian Cyber Security Centre's hotline were 4 times higher in May than a year earlier. A report from the Cyber Security Industry Advisory Committee said hackers were exploiting weaknesses in the nation's finance, health, education and energy sectors. Head of the group and boss of Telstra, Andy Penn, said Australia faced a complex and layered cybercrime environment that targeted everyone from a fish and chip shop owner to an ASX 200 company. Higher oil prices have helped Woodside Petroleum boost revenue during the June quarter by 15%. It was more than 60% higher than a year earlier, although the number of barrels of oil produced, 22.7 million, was lower than a year ago. Woodside's share price fell 1% yesterday. It's unusual how the Australian Oil and Gas Group's share prices haven't risen in line with higher oil prices. I mentioned yesterday the surge in coal prices to decade highs. Whitehaven Coal yesterday said it would eventually enjoy the benefits of higher prices, but over the past 3 months, its products sold for around 14% below the benchmark thermal coal price. Investors sold off the stock yesterday and its share price ended more than 5.5% lower. There were several reasons for the low price. Some coal is always sold on backward-looking prices, but also weather and poor quality coal had impacted the outcome. Sydney Airport's board has rejected the $22 billion bid for the company as not being in the best interest of security holders, Sydney Airport said the bid was below the trading price prior to the pandemic, and it was strongly positioned to deliver growth as vaccination rates increased and the world moved beyond the pandemic. Seven Group now owns more than 50% of Boral, meaning its offer of $7.40 a share for the building materials company will remain open for another 2 weeks. Seven's expected to gain at least 2 board seats, though said the majority of members would remain independent. Ryan Stokes, the chief executive of Seven, is in line to become chairman. Buy Now Pay Later Group Sezzle will sell a $40 million equity stake to Discover Financial Services, giving it an entree into the credit card group's giant payments network across the US. Discover is a big player in payments systems in the US and has a market capitalization of $37 billion. It will buy 4.6 million Sezzle shares at a 6% premium to its share price. And just in case you're not sure if ethical investing is being supported by investors, listen to this tale. Fund manager Australian Ethical grew its pool of assets by 50% over the 6 months to the end of June. It now has $6 billion in funds under management, up $2 billion, and the increase was due in part to better returns and in equal part to a $1 billion inflow of new money from superannuation members and individual investors following the cause. Up next is our daily interview, and if you've ever wanted to know what it's like to fly in private jets, here's your chance. My guest today is Luke Hampshire, the CEO of Airly, a company that's making private air travel a little bit more affordable and a lot more accessible. What's more, it's a business that's seen a sharp increase in demand during COVID. It's a terrific chat up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. It's Friday, the 16th of July, 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.